So guys, you're welcome to my YouTube channel. So in this video, I will show you guys how I do my top-down analysis starting from the monthly time frame. So I'll be using Euro USD as an example, and I'll be combining this analysis with C.O.T data and currency index, because the currency index plays a vital role when it comes to forex trading. So I will combine. I will do full technical analysis, full top-down analysis, starting from the monthly time frame to the daily time frame. Then I will show you guys how the next direction of this market, where this market is going. Then I will check my C.O.T data, because the C.O.T data is not fundamental analysis, is sentimental. C.O.T, that's the commitment of traders. C.O.T is not fundamental, is technical, sorry, is sentimental. Now sentimental analysis is traders thought, like what people think about the market, and the C.O.T data is where you see the bank orders, like that's the orders of the high traders, institutional. Like our trades are not in the C.O.T data because they are too small. Even if you are trading with $10 million, it's too small for this market. So the orders are recorded there. Like one order in the C.O.T is $100,000. One order is 100,000. So that's it. Now the C.O.T is sentimental, because you see which pair the big traders are buying and the pair they are selling. So that's how it goes. So I will start from the monthly time frame. So what I will do here is I will zoom out on the monthly time frame. I will zoom out. So even if you're a day trader or a swing trader, you need to do top-down analysis so that you'll be able to know the overall direction of the market. So in this case, once I'm on my monthly time frame, I will first of all identify my monthly levels, the key levels for my monthly time frame. So I can see this area as a very key, a very strong. Now if you are marking your zones on the monthly time frame, like you don't need to make your zones big like this, because this is a monthly time frame. If you go to 4-hour time frame, you see that this structure now that is small on the monthly time frame. If you go to 4-hour time frame, you see the structure will be very big. So since you're on the monthly time frame, you need to make it thin, like you need to make it very small, so that when you go to the lower time frame, you will just see the key level there. So I will just adjust this so that it will accommodate the zones. So this is it. Now you can see how this market reacted here. Okay, let me make this blue. Yeah. So this market reacted here, reacted here, reacted here. Then the market consolidated here. Remember, this is monthly time frame, so the structures are very strong. So the market reacted here again and again. Then now the probability of this market coming down to this structure is high, but the fundamental will decide. That's it. So since I've marked out this level, what I will do is I will find another key level from the monthly time frame. So what I will do is I will clone this. So you can draw another one if you want to draw, but I will just clone this, then identify my level. So another strong level is okay, let me delete this and just draw. So another key level here is this one right here. So this, let me see the touches. Yeah, this is a very strong zone. Yeah, so we have another zone here, and remember the monthly zones, I mark them with red so that I will identify if, like, so that when I'm on the lower time frame, I will know if I'm seeing weekly zones or monthly zones. So I will mark them with red. Then this one too, mark it with red. So this is my monthly structure. Then I also have another monthly zone, which is this one, right here. Yeah, so this is my monthly zone. Yeah, so once I identify my monthly zones, I still have another monthly zone here. Yeah, but this is not active. Yeah, but it's still a zone, so I have to mark the zone. Yeah, Yeah, this is cool. So what this simply means is this: if we take out this zone, if we break this zone, then listen, you confirm with your fundamental and your sentimental, that's C.O.T data. Like the technical will not, like, even if we break this key level here and the fundamentals and the sentimentals are telling you that the market is bullish, there is high probability that we are breaking upside. So but if the fundamentals are telling you that the market is bearish and we break out, just look for selling opportunities because the market is coming here. And if we reach here and the market is now bullish, the market is coming here. If we break here, the market is coming here. We break here, the market is coming here. That's just the logic, because the market move from zone to zone. That's it. The market move from zone, correction, zone, correction, zone, correction. So that's how the market move, impulse and correction. So what I will do now is I will go to my weekly time frame and identify the weekly structures. So let me go to my weekly time frame. So guys, this is my weekly time frame. Now on the weekly time frame, you see that the monthly structure, like the monthly structures, you can see how they are, like they are very neat and accurate on the weekly. Like they are very fantastic zones on the weekly time frame. Now the weekly time frame here, we still have some zones on the weekly, but they are not as strong as the monthly zones. Now zooming out, you can see that this is a red structure. Now this means that this market, now watch this video to the end because I will explain how currency index affect this market. Now this means that this zone here have been taken out. Like the market took out this zone, breaking above, retesting, pushing to the upside. This means that we are coming here no matter what happens. Like mark this date. Today should be 13th of August 2023. This market is coming here. Remember, this is a weekly time frame, but this might be around um let me say February next year or so. But the overall direction here, from technical aspect, this market is coming here. That's just the logic. No matter what happens, even if the market move up, correct, the market is coming here. That's just it. No, there's no two ways about it. So what you should be doing now is to start looking for buying opportunity. Now on the weekly time frame, I still need to mark out my zones, my weekly zones. So let me zoom out and show you guys how I do it on the weekly time frame. Now the weekly time frame, now you can see that I have this zone. I have a strong zone right about here. Remember, I need to make it very small. So my weekly zones, I mark them with blue, a blue color, so that even if I'm on 4 hour time frame and I see blue zone, I will know that is on, like, is a weekly zone. If I see red zone, I will know that is a monthly zone. So I have a weekly zone right here. Now the weekly zone might not get that much touch. It might not get that much touch, but yeah, this is it. This is my weekly zone right here. So you can see how the market reacted. The market reacted to this zone here, this weekly zone here. Now the market is supposed to come down here, but it failed. Now this market break, this resists the market from pushing to the upside. Again, it rejected the market here, and it break out, retest again. Now coming down here, moved up, moved down. Now this market, the first target now is this weekly zone. So the market is coming to the weekly zone before getting to this monthly zone. That's it. Now when the market gets to this weekly zone, it can react, like play around. I call it playing around. The market to play around this zone, confusing traders before moving to the upside. So from the weekly aspect, the market is coming here. So the weekly now is showing us a bullish move. Yeah, bullish move. So since I have this move, now once I go to my daily, so I now identify my structures, and overall now I can tell you that from what I did now on the monthly and weekly, this is like this market is very simple, but it's not as easy as it seems. I keep telling you that, like, this market is fantastic once you know what you're doing. Not that you won't lose, like, you will lose trades, you will lose trades, but what makes you a profitable trader is your ability to manage your risk and control your emotions. Like this is a like this market is psychological, but this market is very fantastic. Now, this is it. Now, in this trade, like I can decide to, I wish I got into this market right about here. So remember, I'm a swing trader, but I don't hold trades like 2 months, 3 months, but I want to start holding trades for up to 4 to 5 months. I have my reasons. The things you are seeing on 15 minutes time frame, the same things are applicable to weekly time. Like some people will tell you that a swing trader will hold trades for like let me say for 2 weeks and end up hitting stop loss. Now, the question is, where did you enter? Like, if I enter this market here now and use, let me say, about 200 pips stop loss, and enter this trade here and use 200 pips stop loss, and my stop loss is about here, and I know that this market is coming here as my first target. Now, from here to here is about, let me check the pips, guys. Like, this is about this is roughly 1000 pips. Then okay, from here to here is a 1000 pips, then from here to here is 1000 pips. Now if you use $20 and you use $20 and swing this trade on just only this trades and leave this trade to run for like 7 months with 0.01 lot size, you will bag up to that 1000 pips. That should be roughly okay, 100 pips should be, that's, you're bagging about $700 to $800 from here to here with $20. Now swing trading is the, like, not that it's the best, but for me it's the best, because on the 15 minutes time frame, like this market is like, is a game of psychology. So trading on 15 minutes time frame, you will be like, you will make money from those time frames, but to get a bigger view of the market, start from the monthly time frame to analyze and try to hold your, this market have to do with patience. Build yourself to hold trades, that's it. So this simply means that this market is coming here from the weekly time frame. This market is coming here no matter what happens. Even if the market drop here, this market is coming here no matter what happens. Now what I'll do on the daily time frame is, once I go to my daily, so let me go to my daily time frame. So guys, this is my daily time frame. This is my, now I want you guys to understand something from here. Now on the daily time frame, this is where I put my trend line. This is where I identify my trend. Now firstly, I'm expecting this market to come here. Now another thing now is that we are in an uptrend, so we are expecting higher high, higher low, higher high, higher low, higher low, and all that. So this market is coming to this blue structure, first target. Now I'll put my trend line. Pay attention from here. So once I put my trend line from here, now remember, this is our initial trend. From here. I want you guys to understand something from here. Like, this is what we call market manipulation on the higher time frame. This is market manipulation on the higher time frame. So this uptrend started from here. We got the first touch, second touch, third touch, fourth touch. The market is trending to the upside. Now here you'll be buying, and the market start correcting. You will say, the market have changed direction. No, the market did not change any direction. The market is just trying to correct, because after an impulse there must be a correction. Correction, that's how the market moves. Don't expect the market to move in a straight line. No, it doesn't work like that. So this market here is just trying to create a correction. Now moving, so once you draw this trend line here, now this is why I say you need to analyze from the higher time frame. So once the market take out this trend line, many people will start selling, saying, this market is selling. If you identify your structures on the monthly and weekly, you will know that we have a support zone here and the market is just coming. Remember, once we have a support and the market is like the market break, there is high probability that the market will come back and test that support before moving to the upside. That's just the natural movement of the market. Now if you map out your zones on the weekly and monthly, now the traders that mark those levels will know that this is not a change in direction. This is just that the market is just trying to come and test this zone before continuing its move to the upside. Now we now have our trend line from here. Now the market pushing down to test this red zone. Now create another trend line. Like this might be difficult, but it's very easy. It's very easy to understand, though it takes a lot of time. Now this is our major trend. This is our major trend line, guys. This is a proof that this market is rallying to the upside no matter what happens. So watch this video to the end. Like you will enjoy this. Now this is our trend line. It's as simple as ABC. Monthly rejected the support. Weekly we have our target, the blue zone, the blue zone, the blue zone. JC fans, the blue zone. The sky is blue, so there's a lot of pips to catch from this trade. Now the daily is bullish, and you can see that the market is just aligning up with this trend, telling you guys this market is buying. I'm just happy because I know that I'll back about around 700 to 800 pips from this market. Though I won't target this blue zone. I'll use my Fibonacci, measure the 0.272 and put my take profit level there. So now this market is here, guys. This is where everything starts from. This is where everything starts. Now we are in overall uptrend. So what we need to do now is to check our C.O.T data. So even the weekly is giving us an ICI. My students, you know what I'm saying? ICI. Check the weekly time frame. You see it's a very clear. Though the correction is a very strong correction. So, and according to the rules, the ICI is not valid anymore. But this ICI, like this market is running to the upside. I know what I'm saying. So my students, take note. This is an ICI. Now I'll go to the C.O.T data and show you guys how it works. So let's now remember the market starts moving to the downside here. So the C.O.T data will tell us why this market is moving down. So let's go and see what we have right there. So guys, this is the C.O.T data. Now my students will be very surprised. Like they will be surprised that this is not the C.O.T data I showed them. This is the raw file. The C.O.T data I showed you guys, this is where the data are, this is where they are gotten from. Now this is this is complicated. Like you can't understand anything here, but this is very easy to understand. Now you can see this is euro short. So let me find the currency pair. Like this is complicated, but this data this is very important. This is sentimental analysis. This is very important. If you know how to read this data, like if you know how to read the raw file, you'll enjoy it. But my students already have the well detailed. Okay, this is for Canadian dollar. You can see it right here, Canadian dollar. This is for Canada. Now let's look for euro. This is for Swiss franc, CHF, the data for CHF. So let's keep moving to the downside. Let's keep looking for, this is for pound. Let's keep looking for euro, Japanese yen. Now this is for euro. You can see it right here, euro FS. Now this is it. Let's see what we have. Now this is the non-commercial. This is the commercial, and this is the non-reportable position. Now let me explain something. The non-commercial, this is the data we need. The non-commercials are the people that are in the market to make money. That's the head. That's the big traders, the bank traders. They are in the market to make money. The commercials, they are in the market to hedge their funds, like their companies, like let me say Coca-Cola company. Maybe they are. I'm giving you an instance. Maybe their main company is in US and they want to pay their workers in Nigeria. They have to push their money from US to Nigeria, and pushing that money, like if they want to pay on the 5th of next month. They need to push the money, let me say, on the 27th of this month. Now, since remember the exchange rates fluctuate, so let me say if the rate now is 1000 naira per dollar, and they are paying 5000, okay, they are paying $1000. Now their $1000 will be, okay, if the rate is 1000 naira, their $1000 will be 1 million naira. Now if they push that 1 million naira, they will have, if they push the 1000, they will have 1 million naira to pay. Try to understand this, like this is try to understand this what I'm trying to say. So if they pay in the $1000, now if the exchange rates change from 1000 to 1200 naira, their $1000 will no more be one. Okay, if the exchange rate change from 1000 to 900, their 1 million naira will no more be $1000. Their $1000 will now be 900,000 naira, and it will not be enough to pay their workers. So what they will now do is they will hedge their funds. Hedging is very simple to understand. Hedging simply means opening a buy and sell order at the same time. Let me say this is the market price and you are buying here. Now you bought here and you sold here. So okay, let me say you bought, this is the market, you bought here and you sold here. Like you used 0.01 to buy and use 0.01 to buy at that. Like try this on your demo account. Use any lot size. Let me say one lot size. Click buy and sell. Immediately you see that even if the market is moving up, you won't be losing anything. Like this is what they do by hedging their funds. Okay, let me try to explain in a way you will understand. You have one lot size, you open the buy and sell trade. Like you open the buy trade with one lot size, you open the sell trade with one lot size. Even if the market move 1 million pips, you will not lose anything, you will not gain anything. That's just it. So they hedge their funds. So instead of them to push in $1000, they will push in $2000. They will use one to hedge their funds, so that they will even if the market increase, or even if the exchange rate increase or decrease, they will not have anything to lose and they will not have anything to gain. So that's what the commercials do. So the data will now, the other one, non-reportable position. This is my trade, this is my trade and your trade. The retail trader, this is our position. You can see what they wrote here, non-reportable. But so our position, like they are not into the market. Like even if you lose $1 million, it can never remove a dime from this market. This market is very huge, and you are competing with intelligent people. So you have to be smart, train yourself. Like this is psychological. So the data we'll be using is non-commercial. So let me try to explain this before going to the real C.O.T data. Now this is the contract for euro. Remember, okay, this is 125,000 euro position. Now this is buy, this is long, this is short. The spread, repeat the spread, you don't need it. Now this is the total long we have, and this is the total short we have. So this is it. We have 228,048 long. So this and 78,237 short, meaning that buyers are higher than sellers, meaning the euro is bullish. Now the change from, remember this data is released every Friday. So this one here, like this one right here, is the change for last week. So last week we have minus 12,000 longs, meaning longs are closed and shorts are added, meaning that that's why the market is consolidating. The market is not moving up or down. This, like everything you need to know about the market is in this C.O.T data. Combine it with your fundamental, and you will know the direction of the market. This is very easy to understand. You get, this is very easy to understand. So you can also join my class to learn everything you need to know about this market. That's just it. Now the market, my students will be very, very angry with me, because this is what I should be giving them, because they paid for it. But I'm sorry guys, we just have to enlighten the traders out there. So This is it. Now this is the percentage of interest. So I won't be explaining this. I won't be explaining this. So this is what we. So let's go to the real C.O.T data that I gave my students to use. So let's get right there. So guys, this is the C.O.T data I got from my mentor, Transparent FS. This is the best. This is the best mentor I've ever come across, man. This guy changed my life. So remember, we analyzed the Euro USD, and we'll be checking Euro USD here. So we'll check, click, then I'll click Euro. You can see the currency pairs. We have USD, AUD, Euro, JPY, GBP, CHF, CAD, Mexican peso, gold, silver, Russian ruble, Bitcoin, New Zealand dollar, South African rand, and Brazilian real. So I'll be checking just two because I'm analyzing Euro USD. So I will click Euro. Now I want you guys to understand something. So everything we saw in that data, the raw file is here. So you can see the total long. You can see the total long here. You can see that same 228,000 long, the same 78,000 shorts. Then the long, this is the long, this is the buying, this is where they are buying, this is the selling. So the overall direction is bullish, but they are selling, like they are closing short, they are closing long, meaning they, let's start from here. So they closed 13,000 longs here, meaning the market is short term bearish. If you check Euro USD, you will see that daily time frame, you see the move to the downside. Now day traders will be seeing that as a downtrend on the 4 hour time frame, but higher time frame will tell you that, guy, that's just a correction. Like I'm seeing that as a correction, not a downtrend. That the COT that is telling you everything now. They closed 13,000 longs. If you want to understand it better, join my class. Now they closed 10,000 longs here, and they closed 12,000 shorts. Sorry, 12,000 long here, meaning the market is short term bearish, not long term. And here also they closed 12,000 shorts, closed 5,000 shorts, and opened 10,000 shorts, meaning the market is also short term bearish. Now if you check the net positions, like I told my student that the easiest way to check this data here is to check the net positions here. So just check if the net position is increasing or decreasing. So we come from 178,000 longs to 177, 172, 149, meaning it's decreasing short term, not long term. It's decreasing short term. So we have the overall direction is bullish, but we have short term bearish movement from this pair. So let's check the dollar and see what we have. So we move to the dollar, and also remember NFP, last NFP came out bearish, and CPI came out bearish, meaning dollar is overall weak, and weak dollar is what we need for that move to the upside to complete. So this is, and I'll also be telling you guys how to day trade that move to the upside, even if you don't want to swing trade it, but you have to do with patience. So this is the dollar. Dollar is overall weak, man. This is very shit. This is weak. So you can see here we have 27,000 buying of positions, we have 21,000 buying positions, we have 18,000 buying positions, we have 7. Now this means that dollar is weak, dollar is bearish, guys. Don't buy the dollar. Anything you are doing should be selling the dollar. That's just it. This is just the trick. Forget all these things you are seeing online, people trading with 100 lot size. Guy, let me tell you something. If you want to make money from this market, like what you like, stop trying to double your money like in 1 week or 1 month, because you will still lose it. This is a gradual process. Even if you blow $1 million today, the market will not stop. The market will continue moving. Like we will not even know that someone lost $500 or even $1 million. We will not know. So take it slowly. Even if you make $50 in 3 months, guy, take it that way. Like take it like that and just move on. That's it. Don't try to double everything and be the profitable traders are not traders who double their money within 2 days. The fact that you made 1,000% of your capital doesn't make you a profitable trader. What makes you a profitable trader is your ability to manage your risk. One, your ability to control your emotions. Two, your ability like your psychology towards the market, how you react to the market. That's just it. So overall, dollar. I, I'm just giving you guys this thing as an expo for the ones that are not my students. So this is 27,000 longs. So we remove. Okay, let's do it this way. We have 27,000, 21, 18, 17. Now, even a 2-year-old boy will identify that the long position is decreasing. So the long position is decreasing. Now let's go to the short position. We have 16, 15, 15, 14. It's also decreasing, but the long position is decreasing more than the short position. So let's see what we have here. Now the change long, from here we closed 6,000, closed 1,000. You can see we closed more long than short. The market is bearish. Here we closed 2,000, opened 100, meaning the market is bearish. Here we closed 1,200, closed 700, meaning the market is bearish. So let's check the net positions. So the net position is the total order. So the net positions here is we have 11,000, 6,000, 3,000, 2,000. Dollar is weak. Dollar is weak. Any strategy that will make you to buy dollar, don't, because the probability of hitting stop loss is very, very high. So this is how to avoid trades. Now the sentimental analysis here, C.O.T data, is showing us that dollar is weak, euro is long but short term weak. So let's go to currency index and see how the currency index affects the market. Now don't play with the index. The index plays a vital role. Like, oh god, I wish traders will understand that. I wish traders will see what I see in this market. Guys, I wish. So guys, before we move to the index, I want you guys to understand something. Now here, this is our daily time frame. So remember, the euro is short term bearish but long term bullish. You can see the daily trend. The daily trend is an uptrend from the daily time frame. So you can see it here. Now this move to the downside from here on the daily. If you go to your 15 minutes time frame, you will see this as downtrend, but it's just a correction. And from here we have this. We also have trend line from here. If you draw now, you will see this trend line clearly on the 4-hour time frame. You will see it clearly on the daily time frame. But now I've already entered this market, and I dropped the trade in my signal channel, but they are like, everybody now is afraid because they are thinking the market will hit our stop loss, and I will explain why. So let's go to 4-hour time frame and see something. So guys, this is my 4-hour time frame. Now I don't joke with 4-hour time frame. Like, this is my entry time frame. I don't enter on 15 minutes. I enter my trade on 4-hour time frame, guys. So this correction now, remember this trend line you're seeing here, this is the major trend, don't forget. Now we also have this correction now have a trend line to the downside. Yeah, we have this trend line to the downside. So according to what Dapo Willis taught me, remember Dapo Willis is my second mentor, so I got his course. So according to what he taught me, the third touch of every trend line is the most active. So this is the third touch here, and I have been waiting for the breakout of this trade. So I've been waiting for the breakout for the past 1 week on 4-hour time frame. Now the CPI that was released on Thursday, the market broke this trade. So I entered this market. I entered somewhere here. Yes, if I entered here, and my stop loss is way below this zone. So this market is expected to push to the upside. So let's check the index and see what we have on the index. So the market is overall bullish. So let's see what we have on the index and see. So we'll be checking dollar index and euro index. So remember, for this market to push here, we need strong euro and weak dollar. So let's just go to the dollar index and euro index and see what we have. So guys, this is the euro index. Now the index, remember, if you are trading euro USD, if you are trading euro USD, don't mind my writing oh please. If you are trading euro USD, you need, like, the movement you are seeing is based on euro and dollar combined together. But the index, if you are watching euro index, you will be seeing only the movement of euro. Like this thing you are seeing now is the movement of euro. Now you will see something like gap, like some kind of gaps. The index don't, like, they don't move 24 hours like the currency pair move. That's why you are seeing this something like slippage or something like gap. So they don't move 24 hours. So that's it. Now here in the index, now you remember we are buying euro USD, and we need to check the index also to know if so we need strong euro and weak dollar for that move to occur. So here also you see that the same thing we are seeing in euro USD is also happening in euro index. So we also need to once I come to the index, I don't need to map out my major zones. But I can still decide to map them out. But what I just do is I just check my trend. So you can see the same trend is here. So the same trend is right here. Yeah, this is very strong trend. So the euro index is also testing this trend, this major trend here, meaning that euro is ready to move to the upside. So the same move here on euro USD is also in the euro index. But don't neglect this index because it plays an important role. So this is the daily time frame. This is the daily time frame. So this means that euro index now is ready to move to the upside. So that euro USD is ready to move to the upside. So euro index broke this trend line here. Then this is just a retest for a massive move to come. Now don't forget, we also have resistance. We also have our resistance down here. So the market can easily come and get another test of this resistance before pushing to the upside. So if you want to understand more about all these things, just join my class and see yourself elevate. So, and listen, joining my class doesn't mean you will become a millionaire in 2 months. Listen, this is a gradual process. This is a grad. Anybody telling you that he or she have strategy that will make you billionaire in a twinkle of an eye, like scalp, like how to turn $10 to $1 million, how to turn $10 to $1,000 in 2 days. Guy, wrong. Like that's not how it works. This market, anyway, sha. If you try to get rich in this market, if you try to do it quick, this market will humble you. This market no be your mate o. This market will humble you, like bring you low. This market will take everything you have. Anyway, sha, I know what I passed through in this market before I get to this level. I know what I passed. Like this market messed me up. I vowed to myself that I must learn it, and today, to God be the glory. So the euro index here is bullish. Now the index I want to show you something is the dollar index. So let me quickly move to the dollar index and show you what I want to show you, because I need to make this video very short. So guys, this is dollar index. This is dollar index. You can see the dollar index is in a downtrend, and this is what I'm expecting. So let me quickly show you something. Now the dollar index now, like if I come to the dollar index now, like initially this was my trend line. Always try to get always try to get the bigger picture of the market. This is my dollar index. Like this analysis now, if not because of this video, like this might be taking long, but if I'm doing this analysis under 5 minutes, I'm done, because I'll just navigate to my monthly time frame, do it quickly, weekly, do everything. 5 minutes, I'm done, and relax, like sleep. Day traders will be staring at the chart 24 hours, trying to know what's happening on 15-minute time frame. I'll just go to my 4-hour time frame, check what I want to see in the next 24 hours, go sleep. Like, hi, just relax, place your trade, relax, sleep, take a deep sleep. ah. Now this is it. Many people use dollar index the wrong way. I'm not saying I'm the best, I'm not the best, but I know what I'm saying, guys. This trend line is accurate. I just want to show you something. Just pay attention to this. We have this trend line. Dollar index is weak, so this trend line is supposed to hold this market to the downside. But I want to show you something. This market reacted here, come here, react, push down again, and it broke this trend line. What you need to do is, don't say that the market have changed direction, like the dollar index have changed direction, the dollar is bullish, the trend line have been taken out, dollar is bullish, this blah blah blah. Guy, that's not true. Zoom out, always zoom out. This is what Dabo Willis made me understand. Always zoom out of your chart, guys, and place your trade and relax. So this is it. We have a trend line right here. So are you understanding what I'm saying? We have this trend. This is also a valid trend line, and it's like it's a major trend. And remember, for every trend line to validate, we need three touches. Try to understand what I'm trying to say. We got the first touch right here. We got the second touch right here. We need the third touch. The market is supposed to touch here, but it failed. So we need the third touch. And this market is just going to get this third touch before moving to the downside. But if you are like, if you don't zoom out, like if you only do this on 4-hour time frame, you will be seeing uptrend. Guys, this market is uptrend. Analyze from the higher time frame. So this market, this trend line we had here was taken out. You might think that the market will change direction, and all of a sudden you start buying dollar, and all of a sudden you see that spike. Once the market get here, you see that spike to the downside. And swing traders will just be seeing the move. Like, we'll be sleepy, wake up, like, yes, this is what we expected. Like, this is what we expected. We just execute, use that our big stop loss and our target, hold the trade for like 2 weeks, 3 weeks, take out some pips, relax, and take like this market is cool. Once you take it slowly, take it slowly. I prefer to take 2 trades in a week, lose 1 and win 1, than to take 10 trades and lose 8 and win 2. Oh, that's trash, man. So this is our major trend. But if you don't zoom out, you'll be seeing this as your trend. You'll just be seeing this nonsense here as your trend. You'll just be seeing this nonsense as your trend. And once the trend once the market take out that trend, you say, the market have changed direction. You start selling Euro USD. You start buying USD JPY. You start buying dollar. But the market will just get to this point and just drop. That's it. So what I'm expecting from this market now is 2 things are involved. So we have our resistance right here. Remember, this is another key. Let me explain something to you now. Remember, we have this level as our resistance zone. Like, once your technical analysis is right, you'll be seeing proofs. Now, I wish you guys will understand. Now let's do this. Let's just do this. Remember, this is our major trend, and we had resistance right here, daily time frame resistance. Remember, it's a very strong resistance. So even if I decide to extend this resistance level, now if I decide to extend this, you see that the market also reacted to it previously here, making it a very strong zone. So the market coming to test it. We also have this trend line. So we have 2 proofs at that same spot, meaning once this market gets here, it's changing there. And one thing is that one daily spike will just take out about one daily spike will just occur here and take out about 6 candle. Forex is sweet once you know what you're doing. Forex is sweet once you know what you're doing. Just take some pips, take some huge pips out of the market, move some dollars out of the fucking market. Just place your trade, sleep, relax, wake up. Now, you will not understand what I'm saying. So once this market gets here, I'm expecting a rejection. Quote me anywhere. Quote me anywhere. Even in CNBC, they take me to the president. Once this market gets here, it's rejecting to the downside. Now, manipulation can come in whereby the market will just spike up, but it's coming down. It's coming down. And Euro USD is moving up. Like, okay, let me show you my trade on Euro USD. So guys, this is my trade on Euro USD. And I also have a trade on GBP USD, but I won't be analyzing the pair for you guys. Now, this is what I did here. This is my trade. So you can see, like, you can see everything. Okay, let me make it clear for you guys. Oh shit. Let me just make it small. So you can see I'm risking 84 pips to back 387 pips. Let's just call it 400 pips. Now I use my Fibonacci to get my target. Now my students already know how to measure their targets, but this is what I'm expecting. So the CPI, now the market spiked up from here. So let me go to 4-hour time frame, because that's the time frame I use for my entry. So okay, let me explain something on the daily time frame. So we have this downtrend here. So I entered here. I entered because of the CPI. I was thinking that the CPI will spike to the upside, and the CPI spiked. Like, this is the CPI candle. You can see the CPI candle. You can see that spike. The CPI spike, but the spike didn't hold. We have this resistance here, so the spike didn't hold, but the market created that manipulation. Remember, once the market spike, many people will start buying. So that manipulation to take out the stops of many people, take out their stops, but this market is moving to the upside. So this simply means that, and remember, euro is bullish, dollar is also short-term bearish. So if this market decides to give us a double bottom before moving to the upside, that means my stop loss will hit, and if my stop loss hits, I will re-enter the trade. Now this is my stop loss here. Okay, let me go to 4-hour time frame so that you will see the bigger picture. So guys, this is the 4-hour time frame. So let me reduce this color. Let me just remove the color so that you'll be seeing everything. Now this is the 4-hour time frame here. So you can see my entry and everything. You can see everything. It's very clear. You can see everything is clear. So okay, let me remove these structures also. Get this out. Take this out. Yeah. So you can see that major trend, and you can see the trend line. So my students, pay attention to this. I've already told you guys, stop being afraid of corrections. The market will also move up and move down. That's just it. So you can see that we have this trend line here. The market will always move up, come to that trend line. Now my students they're trading with my strategy. Some of them will see, once even if you want to trade my strategy, once you identify the direction of the market, once you know the direction of the market, allow the market to move. Now you can see, like, the market was just consolidating. Let me show you guys. Now this is for day traders and scalpers. The market is consolidating inside of this zone. You can see the major trend inside of this zone, and this is just a triangle. So the market is just testing, rejecting. Even this move up here and this retest should tell you that this market is pushing to the upside. No two ways about it. Now this trend line will also hold. Let me just tell you guys what will happen to this pair. This trend here will hold. This trend line will hold. Let me show you. This trend line will hold. But this trend line will hold. But another trend will occur. Another trend, let me say, will occur. Something like this nature. something like this nature will occur, meaning that this trend here, like this trend line here, the market will always move up, come, move up, come, move up, come. But once we break this trend, we are coming to this trend line before pushing to the upside. So that's what will happen to this market. Now, if I want to day trade this market now, I will just wait. Once the market move up, touch this trend line, I will go to my 15 minutes time frame and look for buying opportunity. Then maybe I'll buy something like here, take profit here, wait for another test of this trend line, buy again, the market to move up, wait for another move test on the trend line, buy again, the market to move up. It's as simple as ABC. But I don't day trade. Even if I see 100% accurate strategy now to day trade, I can never. I'm watching my chart 24 hours a day. I don't like that nonsense. So this is my trade, and I can easily hit stop loss on this trade, but that's another probability sha. Yeah. So let me put back my color to 55%. So this is my trade. I'm currently in a drawdown. Yeah, I'm currently in a drawdown about 40 pips, but my stop loss is, I have a conservative stop. So let me show you my MT5 so that you know that I really place this trade. Like, many people will come to trading view and show you trash, but they won't show you proof that they do the trade. So I do what I say, though I might not be the best, but I trust myself, I trust the process, guys. So let's move to the fucking MT5. So guys, this is my Euro USD trade. So you can see where I entered this trade. You can see it. You can see my stop loss. So I'm targeting about 383 pips, which is, let's say, 400 pips, and I'm risking 80 pips on this trade. Yeah. So that's 5-1 risk to reward. So this trade is projected to hold, like to run for, let me say, a week or two. Yeah, a week or two. And this is a high probability trade. So let me show you another trade I opened, which is US, okay, Euro card. Yeah, Euro card. So this is another trade I opened. I bought this market from here. I use the same strategy I use in Euro USD, but this is what happened. Euro USD, I got in early, but this trade I was like, I have patience in this trade. So you can see the trend. If you draw the trend line, you can see a trend line, and I entered above the trend. But Euro USD, I entered inside of the trend, which is very wrong. So my entry on Euro USD is wrong. So that's it. Now my stop loss, you can see the market gave us a double bottom from here. So if Euro USD will give us a double bottom, that means my trade is in danger. That's it. So my target on this trade is also 400. Now you can see that this, now the thing I was explaining in Euro USD is currently happening in Euro card. So the trend, you can see the trend is currently occurring, but the trend is like there's no higher high, much higher high and higher low. So the market to move up, correct, 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 so like that. So the market will always move in waves, but after everything, the market also have overall direction. So trade in that direction, guys. So once the market open, but this trade, so once the market take out this level, I'm going risk free. I will move my stop to break even. So my overall target is here. So place your trade, relax, sleep, take a deep breath, go to gym. If you play football, play football. Don't look at your chart anywhere you go. It's not MTN everywhere you go. No, trade, place your trade, relax. Like, the money is not in clicking the buy and sell button. The money is in the waiting. So how, like, patience, number one. Patience. Are you patient enough? That's just it. So guys, I'll be ending it here. So I'll try as much as I can to explain fundamentals for you guys. Fundamental is not news trading. I see many people will come to my DM and be like, boss, I trade fundamental, I trade Trading news release is not fundamental, guys. Fundamental is gathering the data from the news release and using them to project the future. Using it to predict the future in the market. That's what fundamental analysis is. It's not about trading the news release. Once that spike occur, you trade pure and you call yourself a fundamental trader. No, no, it's a capital no. Ah, people are messing this market up. Like this market is like, it's not for kids. It's not for kids. It's a brain work. It's a brain work. It's not for kids. So I'll be wrapping it up here.